What up guys, Nakamoto Crypto here today. Yes, what was feared is finally happening and it is absolutely sad. Celsius's CEO Alex Mashinsky was caught trying to flee the country. He's literally trying to get out of the United States, flying to Israel, but he was intercepted and they caught him before he flew out of the United States. Stay tuned, like and subscribe. Let's get right into it. So as you can see right here, CEO Alex Mashinsky of Celsius is now being accused of trying to catch a flight out of the United States. According to this guy, Mike Alfred, he is now saying that the executive CEO Mashinsky of Celsius has attempted to leave the US for Israel through an airport called Morristown, and then he was, however, stopped by the authorities, but it remains unclear whether or not they actually arrested him or he was just blocked from traveling. Maybe they just told him, hey, go home, you're just not allowed to leave the United States, because this is now probably a federal case or whatever. I don't know how the jurisdictions work over there, but if the feds are involved into something like this and they are investigating him, you best believe that he is not allowed to leave the United States pretty much. So Alfred is speculating that Mashinsky has already been contacted by the FBI and questions regarding Celsius's troubles. It is also unlikely that customers of Celsius will be able to redeem their assets anytime soon. People are talking about Celsius going so bankrupt that liquidators are stepping in to buy it, like Wall Street. If Wall Street steps up to buy Celsius, then it's a wrap. It's like a Cryptopia thing. If you remember Cryptopia, the cryptocurrency exchange that went down back in 2018 from New Zealand, you know exactly what liquidators do. People pretty much don't get their money back. In these scenarios, it's going to be really hard. And cases like this, they're going to take years, man. That's why always online, before you give your money to anybody, make sure that you can get the entirety of your money back, because things like this, it's easy to deposit, but is it easy to withdraw? That is the problem right there with many of these cryptocurrencies. It's always an issue trying to withdraw your money out. And also, you know, people just got caught up with greed, man. Like I was saying with all of these Celsius videos that I was making recently, people got caught up with greed and they simply cannot leave their money into their bank account or some blue chip crypto that is slow like Bitcoin. Instead, they would rather give it to Celsius and make 20% a year out of it. But where does that 20% a year coming from? It is coming from Celsius literally taking everybody's money, taking high risk, over leveraging themselves, leverage trading. I hear they gave their keys to some private company, and that company told them, hey man, we lost the keys, we don't have access to your funds anymore. Millions of dollars lost. So you best believe Mashinsky is gonna run away. He is gonna pull the runner, because nobody expected this. A giant company like Celsius going down, out bankrupt like this, and everybody lost their money. Come on. Max Kaiser, he just chimed into this and he went ahead and tweeted this. He's a Bitcoin maxi. He says this is just in. SEC Chairman Gary Gensler is agreeing with Max Kaiser now that Bitcoin is the only commodity asset when it comes to all cryptos, and all of the rest of our 20,000 altcoins, Max Kaiser is out there calling them shitcoin, unregistered securities. But this battle here, I checked this article out where Gary Gensler, he definitely affirmed that Bitcoin is the only commodity and Ethereum and all the other altcoins are pretty much registered securities. If this is the case, they are all in trouble. All of the leaders, Vitalik, Cardano's leaders, Hoskinson and all of these other guys will be in trouble because of this, if this is the case. But then again, SEC will take 10 years to fight this battle, because look at the largest cryptocurrencies by market cap, right? The top 100 coins alone, Gary Gensler have to single-handedly come after each and every single one of them, and this will be impossible pretty much. He's already coming after XRP, and this is a battle that SEC have not been able to win yet. As Ethereum, Gary Gensler was questioned some years ago about Ethereum, and he simply said that, you know, Ethereum passed the Howey test, and you don't want to pass the Howey test. You want to fail the Howey test. What is the Howey test? Look it up, guys. Howey test is simply a test that determines whether an asset class is a commodity or it is a security. So he reckons Ethereum therefore passed the Howey test. They didn't fail it. Bitcoin, they ran the Howey test on top of Bitcoin, and Bitcoin failed at the Howey test, which means Bitcoin is good to go. It is the only commodity that is out there. But at the same time, they have to tread lightly, the SEC. I don't think they have enough assets and funds to come after all cryptocurrencies, classing them as unregistered securities, which means all of this stuff that is going on is pretty much illegal. They're going to have to slap Ethereum with a fine, Cardano with a fine, BNB, Binance. They're already coming after Binance, but Binance is too big to fail. They tried to come after BitMEX last year. They wind up just fining BitMEX, slapping them with a big fine or something like that. So you have guys like Hoskinson, Cardano's leader. Kudos to him. He's out there, working with regulators as to how they can help regulate us. If you want to fine us, fine, or if you want to do whatever you want to do, but they have to have some regulatory clarity, especially with DeFi when it comes to SEC regulations and all that good stuff. So be prepared. I've told you guys since last year that 2022 is the year of regulations. It is the year of the bears, and this market is going to bottom. We don't know when Bitcoin is going to bottom, but some people are speculating October, November of this year. If it happens, it's a major opportunity for you to get back in. Remember, guys, timing the market, especially as far back in the future as 2024, that is the next halving. So before the halving, you have plenty of opportunities to buy all of these blue chip altcoins at a low price and then just flipping them at high prices. That's how you make money in a bull market. In a bear market, when everybody's running away, that's when you need to be greedy. This is why I was preaching to all of you guys, sit on some cash, sit down on some cash. Just don't even invest at this point in the market. Slowly you can dollar cost average into some coins that you really believe in, because you are closer to the bottom than the top, which means Bitcoin fell from 69,000 down to right now 20k. It cannot go any higher than this for now, but you are closer to a Bitcoin bottom, meaning if Bitcoin bottoms at, let's say, 15,000 or 12k even, whatever you DCA back between here and then, you won't lose much catching the falling knife, because it'll bounce back up anyway. Once Bitcoin bottoms, it takes off again. And the beauty about it is, in 2019, actually, people don't remember this, but we've had a relief rally. So this is the year after the first year of the bear market. Bitcoin dropped from December of 2017, peaked at 19k, dropped to $3,000 March of 2018. But by June of 2019, Bitcoin had a relief rally in the middle of the bear market, where it had a run up from 7,000 all the way up to $14,000 per BTC. That is 50 to 75% of the previous all-time highs. So by that logic, if we have a relief rally in 2023 and Bitcoin goes back up from these levels, you are looking at a $52,000 BTC, which is good. That means if you missed out on selling out, for example, last year, November, if you didn't sell out in December either, you have an opportunity now to sell out by next year, 2023, with that relief rally. And then what would happen after that? You're going to see the price tank, and then here comes the Bitcoin halving of 2024, which will explode the price. I'm targeting maybe between 100 and 120k per BTC. Why? Because of diminishing returns. People are claiming $300,000 per BTC or whatever. I don't see that even after our next Bitcoin halving. I see diminishing returns. So your best play in this crypto market would be altcoins if you want those massive high gains. Bitcoin, you can leave it there as a store of value. It's definitely better than your 401k, your retirement plan, because every 10 years Bitcoin is not sitting at these levels. It just keeps going up and up and up. So if you're a long-term visionary and a long-term investor, put some money back into BTC and just treat it as your old school retirement account, where even before you hit the age of 65, maybe Bitcoin can make you retire. And some of these altcoins will too. That is the mind state that I have in the market. So within the next 3-4 years, if you want to retire early, play with some of these solid altcoins that can make you a ton load of money. And hopefully by then, DeFi is regulated too, to the point where, all of these plays that we've been playing with DeFi are legitimized and everybody can finally get into them, because yes, there's room for DeFi to grow too. One last thing I want you guys to be wary of is this right here. You see the news where it says institutional investors are exiting the crypto markets at the fastest rate ever recorded. According to CoinShares, they are saying $420 million just left the crypto market last week. This is a fearmonger article. If something like this come out, you always have something like this that comes out which says Bitcoin is getting heavily accumulated by investors. A number of 10,000 Bitcoin addresses are increasing, which means this is who's buying. This is institutional investors. $200 million buys you 10,000 Bitcoin right now. Only institutional investors and banks are buying this under their radar, which means you don't have to worry if an article like this comes out that says institutional investors are leaving Bitcoin and all of that. $400 million are exiting, when one guy just put in $200 million, one institution. So as institutions are leaving, new institutions will be coming in because they know what they're playing with. They know BTC is here to stay long term, so they all gonna attach themselves with the number one commodity. Plus, buying BTC is much better for institutions and banks because they play it safe. They don't want to play with altcoins and then realize, hey, the SEC told them, for example, Ethereum's a security, so they don't want to do that yet. What they'll do, they stick to Bitcoin right now. But in the future, once regulatory clarity comes in, you best believe that the institutions are going to play with these altcoins heavy, and this is when you will see mass gains, mass adoptions. You're going to want to get in before all of that transpires. With that being said, like up the video, share it, subscribe for some crypto content. I've been Mr. Nakamoto Crypto, and I'm out.